Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about BTC USD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And then we will also be checking the on-chain data to see how Bitcoins are moving on and off from exchanges, and precisely we will be looking at the exchange reserves. And by the end of the video, by using a combination of these three different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the macro movements here on this chart, on the technical side, what we can see is that at the moment the market is rejecting exactly the previous cycle high. In fact, from here, all the previous bear market was developed. Here we had the halving, the market entered into a bull market. Then we had the bear market, which in my opinion ended exactly here with a test of this previous cycle high. And in fact, I did make a full analysis of Bitcoin when the market was here, explaining all the reasons for which I expected this rejection to the upside. And by the way, I will link that previous analysis in description, so you can go and check it out for more free education. Now, in a situation like this, since we expected a rejection to the upside, the market gave us the rejection to the upside. However, at the same time, in a situation like this, I do not expect the market to create new all-time highs before 2024. Only after 2024 and the next halving, only at that point, I expect the market to create new potential all-time highs. Dropping down on the weekly time frame, what do we see? Now, from a weekly standpoint, in this case, the structure is extremely clear. In fact, starting here from the left, we can see how this area was acting as previous weekly support here. The market, in fact, tested its zone and immediately rejected it to the upside. After that, the market broke below the zone, and that previous support was turned resistance, because what we know is that previous support in the market, once it gets broken to the downside, becomes resistance. The market, in fact, tested this resistance and respected it as such, creating this rejection to the downside. Again, the market here tested the level and respected it as resistance. And after that, we had a break back above the zone. At that point, that previous resistance became support. And the market, in fact, started respecting that level as support, as we can see here, and again here. So what we have at the moment is a market which is currently testing a quite strong historical structure level of support here on the weekly time frame and is currently rejecting it to the upside. So in a situation like this, we could expect more potential bullish continuation away from this area. Going down on the daily time frame, what do we see? Now, from a daily standpoint, we have to identify that clearly we have a market which currently is in a range. We have the top of the range here, and we have the bottom of the range exactly here. Now, until the market will remain in between these two levels, this one here acting as support and this one here acting as resistance, we really cannot expect anything interesting. In fact, until we will remain bounded inside of this range, we could simply expect more potential horizontal price action to be developed. Now, before we continue with our analysis here on the daily time frame, let's first go and check what is going on when it comes to the fundamentals. Now, as we said previously, the first thing that we need to check is the commitment of traders. So what institutions are doing in the market. And what we can see is that with the last reports, we had a clear shift. We went from having a negative net positioning of minus 1,100 net positions with more shorts than longs. In fact, we had 14,100 shorts compared to 12,900 longs, all the way up to now having a positive net positioning, so the complete opposite, with having more longs than shorts from an institutional perspective on Bitcoin. So institutions are starting to move to the bullish side of this market. If we go and see what we have when it comes to the on-chain data, so how Bitcoins are moving on and off from exchanges, and we focus on the exchange reserves, what we can see here is that the white line is the price, the purple line is the amount of Bitcoins on exchanges. As the price was first dropping and then recovering, the purple line, so the amount of Bitcoins on exchanges, has only been dropping over and over again. Now, this creates massive illiquidity. So if demand gets increased, or if the amount of Bitcoins emitted into circulation gets cut in half, which is exactly what will happen with the next halving, at that point price should increase to accommodate for this new demand, because a massive amount of Bitcoins are getting bought and moved away from exchanges, possibly in cold storage and possibly by institutions. So at the moment, the fundamentals are very strong. So moving back to the technical side of the market, as we were previously saying, until the market will remain inside of this range, or even if it will break below the range, there is nothing really interesting, because the fundamentals are strong and the technical on the monthly and weekly are indicating for a bullish move, and the best probabilities come when all the time frames and fundamentals are indicating the same direction. The only way in which that would happen is if we get a break above the high. If we get a break above the high of the range, at that point, the resistance of this range would become support. And after the break, on the retest of the previous resistance turn support, that is where we would have very good probabilities for a potential rejection to the upside away from this level. So if we get the break on the retest of this previous resistance turn support, how we could be approaching a potential move higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the CO2 data and the on-chain data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential move higher for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the CO2 data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here past the testimonials, you will see that at the moment there is a massive special promotion in which you have a huge discount on the upfront price of the program from $497 all the way down to only $97 one-time payment. And if you continue to scroll down, you can see that at the moment the time to join is almost expired with this offer. So I really suggest to take advantage as soon as possible before it expires and price goes back to normal. And if you continue to scroll down, you will see that directly from here, there is the button to join in order to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. You can go and check it out. The link is also in the description at transparentfxtrading.com, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.